Welcome, I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Vince Stefano, where we're here to provide you insights about the markets and taxes and much more. Today is July 17th, and today is my first day back in the office. I was on vacation. I just got back from Italy, had an amazing time. My nephew got married in Sardinia, but here we are, and as I'm reflecting back over the last few weeks, what we're still hearing on headlines are Jerome Powell versus Trump. There's also the markets are up, and we also have some updates on the big, beautiful beauty.
Maybe we should get them in the octagon.
There you go. It's crazy. It's like, wow, what are they doing now? But it sounds like as of yesterday, Trump's saying he's not going to fire Powell, but now he's looking at the Fed building and wants to cut some.
I'm not really sure he has the authority.
I don't think he does. But.
Only for cause, and that's why they're trying to find cause. That way he can say, I have cause, but I don't know. Who knows? Who knows what he's going to do?
But anyways, we've had this conversation. This has been going on now for many months. So just want to give you a quick recap for the markets. So as of yesterday's close, yesterday was July 16th. The Dow Jones year-to-date is at 4.02%. 4.02% year-to-date. So over the last few weeks, it's only up about 1%, which was surprising. The NASDAQ, as of yesterday's close, was at 7.35%. And we've actually seen over the last few weeks, it's up over 2% approximately. And the S&P 500, as of yesterday's close, was at 6.5%. And we've seen about a 1.61% increase over the last few weeks. But the biggest move, one of the bigger movements we've seen is in the Russell 2000. Year to date, it's actually down 0.14, and it's up over about 2.44% over the last few weeks. So markets are...
That's the small stocks.
Yeah, the small stocks have actually done fairly well. And I was looking at the small cap Russell 2000 index over the last 3 months is up 17.85%. So we've seen a lot of market movement. But year to date, we are in the green with a lot of these different indexes, which is not surprisingly, but I'm happy to report those numbers.
Well, small stocks have underperformed the overall market for about the last 15 years.
Yeah.
So, and that's not an exaggeration. It's somewhere in that range, 13, 14, 15 years. So you think at some point, they might catch up because generally speaking, small stocks will grow at a faster rate than big stocks. But right now with all the AI and the chips and all that, that's where all the money's going.
I agree with that. And also, since we have higher interest rates, that does put a little bit of a dampening effect on small stocks. So if we do see the Fed start cutting rates, and I don't know what your percentages are, but I know you're going to get to it.
I'll get to
but
it.
But if the Fed starts cutting rates and they do maybe, another percent downward or maybe 2%, I think you'll see small stocks really accelerate.
But Vince, we had almost 0% interest rates a couple of years ago, and they still were getting...
They did okay, but recently they've done very poorly because rates are pretty high. So let's see what happens with the rate cuts.
Poorly in relationship to some of the larger
Some of the large ones,
but like Catherine just said, 17% in how long a period of time?
3 months.
In 3 months. It's pretty good.
Yeah, that's pretty good.
Again,
maybe it's their time.
Could be. Cut rates, small caps go up.
So talking about rates, so the probability of a Fed rate cut this month is 3%, so pretty low. And then the odds of at least one rate cut by September is 55%. So that's 55%. So.
This whole thing with rate cuts, I look at what Powell has done in the past, and he always says that he's data dependent. Well, if you're data dependent, over the last 5 months or so, inflation hasn't done anything. Slightly higher, but certainly not what all the bears were saying about, which is the naysayers, about where inflation was going to go. Mm-hmm. Now, of course, there's some people who say, well, it really hasn't kicked in yet, and it'll kick in later. Maybe it will. But so far, 5 or 6 months is, a pretty good enough time span. Mm-hmm. So I can understand Trump's frustration with him not lowering rates, especially when most of the rest of the world is lowering rates. So, I kind of understand the fight, although I don't like the way it's being done.
And it's been going on for months now. That's what I'm
saying. To call out people in public, I'm not sure that's the way to do it. But, the bears are still absolutely convinced that, tariffs are going to cause inflation to leak into the economy. And, right now there's no hard evidence that that's happening. Mm-hmm. And I know that I read something on X that Secretary Besson said, quote, once again, the inflation propagandists have been proven wrong. Well, they're proven wrong in the short run. Let's see what happens. But my point before was, if you're going to be data dependent, then be that. But if you're going to say, well, but something might happen in the future, that's different. Okay, and that's not what he's done in the past. So it seems to me that, if inflation so far over the last 5 or 6 months has not moved, I would certainly consider lowering rates if I were in charge, which I'm not.
No, but
you're probably everyone's lucky I'm not.
But you're right. Energy prices, food prices, a lot of overall prices have come down. And so that's a good sign.
Eggs are cheaper.
They're always talking about eggs, and
They're $2.99 again at Vaughn's.
That's great. I know, but I'm saying, to your point, Steve, inflation has not gone up as much as people have thought. In fact, a lot of stuff has come down more than people have thought. So, I'm in the rate cut. I'm saying cut rates. Yeah, it'll help. I mean, but plus, when you think about it, at 4+ or whatever the Treasury is, when you're thinking about how much money we have to spend on paying that debt service, if you lower rates nicely, that's going to cut into that, and that'll be very nice.
Don't you wonder why we didn't do $1 gazillion worth of bonds when it was almost at 0% and do it for 40 or 50 years?
I think they tried, but I don't know how much.
You don't think they were buyers?
I don't know. I don't recall, but I do remember there was like a 100-year bond or something that they were trying to push
really?
out.
Oh.
Yeah, I vaguely remember something, but anyway, I not being a bond trader,
But you play one on TV?
I play what I do, and on this podcast.
So it looks like so far earnings are starting to come out a little bit, but it looks like there's a little more
just
coming
quickly,
our
I'll
way.
touch on that. We started seeing the banks and the big financial companies come out this week, and most have beat analyst revenue and ESP, or earnings per share estimates. And the interesting thing is most of the big banks have said the economy is very resilient. Corporations, consumers are, continue to charge ahead. Consumers continue to spend. Companies continue to spend. The outlook, interestingly, from these big banks has improved a lot from first to the second quarter. And I think a lot of that, as you were saying, the tariffs have been delayed or modified. So I think that's helping the overall sentiment. Most economists.
I also think that the tariffs aren't having the effect on the market that they did in April.
Yeah, that's true, because the market's starting to anticipate and kind of see what they could look like. Most economists have dropped the recession call, which is, who knows? I mean, they've been barking recession for the last couple of years.
We've been talking about recession
I know.
for 5 years
Oh, I
now.
know that. And the interesting thing is most Wall Street trading desks have raked in big profits so far this year, and a lot of it's in the second quarter because there's been so much trading. Consumer spending has been resilient. Credit card spending is actually up 7%, and so the banks are very happy with that. Tariff and trade issues, they still haunt the investor a bit, but one of the things I think is interesting, economic expansion and bull markets are lasting a lot longer, and I think that's a good sign. Technology spending has been exploding, and a lot of it is AI data centers.
Don't you think that's masking a little bit of the inflation?
Oh, absolutely. Yeah. Oh, absolutely. But the other thing is you're seeing tremendous innovation, and you've talked about this a lot, and we've talked about this in the podcast. Technology innovation is huge across numerous industries, and I'm not saying just technology. You look across everything from energy to banks to any type of service company. AI and other innovations are huge. But the one thing that's kind of interesting is all of this innovation is demanding power. And what we're seeing is huge amounts of power that need to drive these databases. And so
and we would like to give you all the names of the companies that are probably going to
but we can't. Unfortunately, we can't.
So
but I am going to say.
So if you want to call us, and we'll give you those names.
That's true. But I will say that the estimates for power, believe it or not, is they say there's going to be a 6% or 6 times the amount of power that we're seeing today is going to be needed in the next 5 years. And so I think what you're going to see is a lot of nuclear energy coming to the forefront because everybody, again, is talking nuclear power. And I wouldn't be surprised if you start seeing some of the big utilities or some of the other big companies, especially technology companies, look at some of these nuclear companies and look to buy them, especially if M&A activity begins to pick up like we all think it will. Merger and acquisition pick up, especially under the new OBA bill that that Rachel's going to talk about. So I think, hey, if you're in the market, stay there. You've got industrials, materials, a huge amount of earnings coming next week in those areas, and then we've got the big tech companies the following week. So, unless something deteriorates in your companies fundamentally, I would not sell right now. I think the market's going to continue to move to the upside.
So on July 4th, President Trump signed the bill, which is the One Big Beautiful Act. So Rachel's been learning a lot about this and wanted to kind of chime in today.
So now you can actually talk about
it. I know.
I'm like waiting
for a long time.
Yes, now we can finally talk about it. So the question is, what is in the bill? There was a lot of confusion because, of course, there was the first bill from the House, and then it went to the Senate, and then it went back to the House, and then it went. So what is actually in the bill versus what is not? So one of the questions is, it didn't eliminate the tax on Social Security, unfortunately. However, there is a new senior exemption. Now, that's only going to be in place for 3 years, is what they're saying. So 26, 27, 28. So let's just talk about some of the provisions that are in the One Big Beautiful Bill Act.
Are you going to talk some more about that?
Yes, I'm going to circle right back around to that. So the Tax Cuts and Jobs Act tax rates. So back in 2017, there was a huge tax act that got passed, and it effectively lowered all the tax brackets. So they made that permanent. So let's talk about what permanent means. Permanent means it's only permanent until the next
bill gets passed.
Next bill gets passed.
Okay.
So just because it says it's permanent doesn't necessarily mean that it is permanent.
But at least it gives some guidance for companies so that they can make some planning decisions.
For at least the next 4 years.
3.5.
3.5. Okay. So under OBA, we think that that's what this bill is going to be called. It increased the standard deduction, so anybody who doesn't itemize, they have a little bit more wiggle room with their taxes. And it permanently repealed the personal exemption. So back in 2017, you were eligible to take a standard deduction or itemize and then take about a $4,000 personal exemption amount. And that temporarily repealed that back in 2017. So they've made it permanent now, so that's gone. Unless you're over 65. If you're over 65, you get a $6,000 exemption. So that's an additional $6,000 that's not included in your taxable income. So the cool thing to think about this is that it is an exemption. It's not an increased standard deduction. So what that means is you can itemize your deductions, and then on top of that, you get another $6,000. So just something to note. And it is for 2025 through 2028. And it also phases out, meaning it goes away if your income is over a certain dollar amount. So if your adjusted gross income is over $150,000 and you're married, I believe you don't get it. If you're single and your income is over $75,000, you don't get it. And it does phase out, meaning it doesn't just go away all of a sudden. You get it. It reduces over time, over income amount. So that's kind of one of the first pieces. The big piece that people were wondering about was the SALT deduction, or the state and local tax deduction. It's been capped at $10,000 for the past 5 years. Since 18, 19, 20, 21, 22, 23, 24. Okay, longer than that.
Well, good thing it wasn't more than 10 years.
Yeah, exactly.
You're running out of fingers.
But they've raised it to $40,000, but it may also go away in 2030. So it isn't permanent yet. It also phases down, meaning if your income's too high, you don't get it, but it doesn't go below that $10,000 cap. So,
do you know what the income level is?
I don't know it off the top of my head yet. And there are a lot of regulations that the IRS still has. There's a lot of uncertainty in this. Just because it gets signed by the president doesn't mean that it's set in stone. Now the IRS gets to take a look at it and say, okay, this is how we interpret this piece and this is how we interpret that piece. So there's a lot of change still to come. One of the fun things is the charitable contribution deduction above the line. It's $1,000. So even if you don't itemize your deductions, you get to deduct $1,000 off your income for money that you've given to charities for 2025, 6, 7, and 8. They've also put in something new that will require some planning going forward. So they instituted a 0.5% floor for charitable giving, which is, I've never seen this before. So they had that, they have it for the medical deduction. So medical deductions get a 7.5% haircut, meaning you have to have a certain amount of medical expenses before you actually can deduct it. So they're instituting the same idea with charitable giving now. So basically your charitable gifts gets a haircut of 0.5%. I don't understand, but maybe it has to do with that, the above the line deduction, the $1,000 that everybody gets. So maybe it works itself out. The next thing is the mortgage interest deduction was made permanent so basically you can deduct your interest on loans up to $750,000. It did not revert back to previous law where it was $1 million. And they also said home equity line interest is not deductible, still not deductible. What is deductible are mortgage insurance premiums. So if you are paying the extra mortgage premiums on your loan for your primary residence, you can deduct those if your income's under $100,000. Next up, itemized deduction. So this is also a planning piece. Previously, before 2017, there was something where if your income was in the 37 of the top bracket, your itemized deductions were reduced by a certain amount. So this phase out is coming back in 2026. So this is a planning piece. If you're in the 37% bracket, you definitely want to work with your advisors to bring your income down to that 35% bracket. Health savings accounts, shifting income or delaying income.
Or quitting work for maybe 3 months.
Correct, yes, something like that. But you definitely want to work with your advisor to see if you can get yourself down into the 35% bracket from the 37. Campaign promises, so no tax on tips, no tax on overtime is in this bill. And it is, in the tax community, we're wondering how are they going to do this? How are they going to roll this out? Because it is, your tips and overtime are still subject to Social Security and Medicare. Mm-hmm. It will still be reported on your W-2, but you get what they call the above the line deduction. So you report your total income, and then whatever your tips are or your overtime pay, you get to subtract that off. And there are limits on this. So for instance, if you get tip income, you can deduct up to $25,000 of your tip income, and there's all sorts of rules that go around this, so definitely check in with us on that. Overtime, also interesting, above the line deduction is $12,500, and if you're married, you each are eligible for that. And then there's another one. There's no tax on car loan interest. Which I thought was interesting, but only from 2025 through 2028, and it's only up to $10,000 worth of interest in the car. The final assembly has to be in the U.S. Let's see, what else?
Sounds like a lot of things
so many
are
fun
going
things
to be phased out before the next election.
Yes, exactly. And then the Trump accounts that passed. So basically, if you have a baby, and you'll get $1,000 to start an account for your child, and they're interesting how these accounts work. I don't know all the details on them. I don't think they know all the details on them yet, but
I was reading somewhere.
Stay tuned.
I was reading somewhere where it's not a good deal at all.
That's what I heard as well. So I'm not exactly sure all the details, but
Maybe we'll talk about that the next time.
yeah, let's talk about that. Mm-hmm. Finally, estates and gifts. They permanently increased the uniform estate and gift tax exclusion to $15 million. Per taxpayer, and that's applicable to deaths and gifts after 12/31/2025.
So what about the qualified business income deduction? Because that's obviously, we have a lot of business owners.
Yes, so the qualified business income deduction is, I believe they made it permanent, and it was going to be 23%, but it is staying at 20%. Just really briefly, on the electric credits and vehicle credits, you have an action here to take. If you want to get a car credit, they will be gone as of September 30th of this year. So if you were thinking of buying an electric vehicle, there will be no more credits after September 30th. And the same thing with this solar credit, that 30% that a lot of people were installing solar and then they received a 30% credit of the installation and purchase price. That will also be completely gone as of December 31st of this year.
So that may be bad for the EV industry, what you first said. I mean, I think that sales were, although they're there, I thought that they were slowing down anyway. But this, it'll be a nail in their, one nail in a coffin.
I agree with you there.
I mean,
$7,500 is a lot of money when
Right.
you're buying a car.
I think that was one of the reasons that Musk was so angry,
Oh, absolutely.
with Trump.
Absolutely.
So
But-
go back to the qualified business deduction you talked about. Explain that a little bit. Explain what it is.
Okay, I can do that. So the qualified business income deduction, or QBI deduction, is how a lot of people refer to it. This was passed under the Tax Cuts and Jobs Act in 2017. It started in 2018, and how it works is the reason behind it was that they slashed the corporate tax rate to 21%, a flat tax, and to make it equitable to other business owners, they came up with this qualified business income deduction. So if you have a business that has qualified business income, so it doesn't apply to investment income if you have a business, it applies to if you're working in the business, doesn't apply to wages from your business. So if you have a partnership or an LLC, if you are a sole proprietor, if you have an S corporation, and it's way more complicated than this, so I won't get into the weeds with it. But if you have income from your business, you get an additional 20% deduction on your personal tax return based on whatever the net profit from your business is.
Is that even with a service business?
So getting into the weeds, so there are specialized service trades and businesses. And so if your income is over a certain dollar amount, it phases out completely. The deduction phases out completely for specialized service trades or business. Let's just say accounting, healthcare, financial services.
It's funny. All those people that said this was something for rich people, the rich people aren't getting anything, really, or very little. And mostly the lower and middle class are getting the biggest cuts.
Yeah, because I don't know how many very wealthy people get tips and overtime.
So
the estate thing is big.
The estate thing is big.
For wealthy people, that's pretty good.
Well, and originally they were doing that because farmers were selling their farms and couldn't afford the taxes on it. I mean, that was the original impetus of this whole thing way back when. So, having built up after all the taxes and everything else you paid, having built up your estate, I think it's fair that, you're not paying tax for the 80th time on it.
So back to the qualified business income deduction. Sorry. No, it's all right. But OBA, or the One Big Beautiful Bill Act, does make this deduction permanent until it's not permanent.
Until they change it.
Until they change it.
And then to Rachel's point, there are a little more nuances and criteria and phasing, and there's a lot more to
So
it.
many nuances, so call us.
Well, I think a lot of these phases happened because the hardliners didn't like the fact that they didn't go farther
Right.
in cutting,
They wanted to go big time cut.
right, and that
And
didn't
you're right
happen.
there, yeah. And then, that's why they threw that $9 billion rescission bill in there to see if they can get more back from the.
Well, you know what? I'm
clawback.
gonna rant again because this is still our biggest problem.
Oh, absolutely.
And nobody wants to really say, okay, we're going to cut expenses. And every time they do, somebody in the other party, whichever party isn't in power, says, oh, you can't do that because you're going to hurt somebody. But in the long run, everybody's going to get hurt unless we get the deficit and the debt cut. Even right now, even with all this, we're still going to have deficit, right? Do you know that?
Big time.
Yeah, I had heard somewhere we're still going to be, $1 or $2 trillion deficit, and you just can't keep doing that every year without imploding your economy at some point in time.
So back to business owners.
Oh, sorry.
It's okay.
Yeah.
Just two more quick things for business owners, since you did mention we have a lot of business owners that listen to this podcast. Bonus depreciation, that was one that people were wondering about. Are we getting 100% bonus depreciation? We are, so that's exciting. What that means is if you buy assets for your business, you can write them off 100%. Any assets that you purchased after January 19th of 2025. So it was not made retroactive all the way back through the beginning of 24, which we were kind of hoping for, but beginning of 25.
So you can deduct that. Do you have to, like depreciation, you have to give that back at some point?
Yes, if you sell the assets, correct, unless they expire.
Okay.
Yes, but bonus depreciation was a big one. Everybody kept asking, what do you think about that? And here we get it. We got the bonus depreciation, so that's exciting, I think.
Anything else?
There's so much more, but we'll include that on the next podcast.
Yeah. Maybe we'll do a special, just one on this, so you can get into the weeds.
I can get into the
Yes.
weeds.
For those
Yes.
people who are nerds and want to hear all about taxes and, perhaps have
exciting.
insomnia.
Put some people to sleep.
Puts me to sleep, to tell you the truth.
I'm just happy we have a bill that finally got passed.
Yes,
Because there was a lot
me
of
too.
uncertainty, and then everyone
Now
was
we can at least
questioning-
plan.
Yeah.
for-
Well, if they didn't
yes.
do that, then taxes were going to go way up again.
Yes.
So I think it's a good thing for business
Yeah.
that it didn't. But again, I go back to everyone was saying that this is something for the wealthy, with the exception of the estate, going up as far as how much you can pass on. Most of this stuff is really for people making under 150,000, and I don't think that those are considered super wealthy. Not anymore. Although, when I was going to college back in, the caveman era, 1970s, I remember talking to my wife and saying, boy, if we made $100,000, we would be rich. Today, $100,000, you're okay, but it
Depends on where in the world you live, too.
Yeah, not
Yeah.
in California.
Not here.
If you're living in Kansas or something, you can live on it. But, inflation has just eroded that. Of course, that goes back to why you need to have growth in your account. Goes back to why when we do financial plans, you can't
Factor
just say,
inflation.
okay, I've got this much money, and as long as I can just make 4% a year or whatever it is, more than likely that's not going to be enough over the course of 10, 15, 20 years.
I have one more thing.
Oh,
All right.
This
does
is
it
also
have to do with UBI?
this has to do with OBA. Yes, the One Big Beautiful Bill Act. So a lot of people asked, will the pass-through entity tax workaround still be there for business owners if they increase the state and local tax deduction? And the answer is yes. For most states, we do think that for business owners, you will still get to pay your state taxes through your corporation, take the federal write-off, and then use that as credit on your personal return. So that was good news for the business and business owner community.
You have anything else?
Nope, I'm done now.
Okay. And that's a wrap.
But wait, there's more.
Sounds like the commercial.
Yes.
All right. Well, there's a lot going on. The markets have been pretty resilient, I'll say that. It doesn't look like, as Vince was saying, it doesn't look like right now that the tariffs are going to kill this market, although maybe overvaluation at some point will. But as long as people are still buying into the tech stocks, it's keeping, quote, the market up. I think if you look underneath the hood, I don't have the specifics on this, but I think the S&P equal value, not the S&P index that we normally use, where everything is equal as far as each
weightings.
Yeah, the weightings in it. My guess is that that's not done nearly as well as the weighted S&P 500, which is what we normally use.
Probably not.
So-
But I will say one thing about this whole tax bill, and I think what's kind of what I think is very positive about it. And I think anytime you get tax cuts, and anytime you can get businesses to get significant tax cuts, they're going to use that to hire more employees, which is going to grow the economy, which is going to increase the tax revenue to the government. And if the government can stop spending so much damn money, then yes, I think that's going to be wonderful for not only the markets, but also, as you say, for the debt service that we have to pay. So
Yeah, I don't know if they're going to be hiring a lot more employees, only because I think the other side of that, of the argument lately has been that because of all the AI, because of the robots and everything else, that in the near term, some of those employees aren't going to be there. But certainly I think the profits will be increased. Don't know if that includes more employees or not.
I always think that when you see these tax cuts, employers start to hire more.
Yeah. Well,
Anyway,
let's hope you're right.
Let's see what happens.
That would be great for everybody. Be a win-win-win.
Absolutely.
For OBA. Oh, boy, I love
There's
that.
one more thing, but we can talk about that next time.
Okay. And wait, and there's
Wait,
more.
I found one more thing.
Yeah, there's more.
All right, what day is today? The
17th
of July.
Oh my goodness,
Yes.
we're past the halfway point here. And we will be back here next Thursday.
We will.
All right, next Thursday we'll record. You probably get this next Friday, or the next one.
Yes, but this one you'll get this week.
This one you'll
Yes.
get this week, probably tomorrow.
Yes.
Which you won't know because it'll be today for you. All right. Anyway, thanks for listening, and we'll talk to you again next week.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.